Hi everyone, welcome to this third options lab hosted by Coincall and SignalPlus. As people are still coming in, we'll start in around 3 minutes. Hey, okay, let's begin. In 2023 and early 2024, it was a great market. BTC has go back to 40K level, and from around 13K, it was almost a almost a triple in price. And I think many of us here are wondering how to trade in this volatile market. For example, we all know that this market or this rally is filled by the ETF news, the expectation of the approval of spot ETF. But however, we all do not know if this is a good news or bad news, because some might say it is a sell the news. Like, yeah, when we look at the market now, it's somehow true that after ETF the market dumps a lot. But when we go back to the time that ETF has not been approved yet, we do not really know if the price will go up or down. So some might ask if they can trade volatility in this volatile market. And if they have a clear view of the market going up or going down, they would wonder how to safely bet directions. So today, we'll go through all these and go through how to utilize option strategies to trade in this bullish market. The first strategy is covered call. Covered call is long call, a short call, and together with long spots holding BTC. With covered call, traders can earn money from theta every day, which means when time passes and price stays stable, traders can earn money from it. Looking at this chart, the chart on the left, if the price stays stable or go down, you still earn money, while when the price goes up, you earn less. However, as you are holding spot BTC, if price goes up, it means you sold your BTC at a higher price. It means that's what everyone do, try to sell their spot assets at a high price. So we can also take profit from time to time to make sure that we're in a good spot, that we do not when retracement happen, like the current market, it has broken 39K and back to 38K. When the retracement happen, we don't lose all the profits. To avoid liquidation, it's also advised that to do covered call without leverage. So in some scenarios, we all know that many traders are trying to maximize their profit by leveraging. But to be honest, even if we leverage by selling more calls or do long futures, how much more can we earn from this? To be honest, not much. However, at night we have to pray that the market doesn't go busted or go the other way, go mooned. It doesn't go very, very volatile, because when the market goes volatile, we might get liquidated. For example, some might also Go for short straddle or strangle, a double selling strategies that maximize profit while it is a double-edged sword. The risk is maximized as well. So to make sure that we have a stable profit while risk is managed well, it is advised not to use leverage in this strategy. The next strategy is call spread. It is composed by selling call with lower strike price and buying calls with higher strike price. As we see from the P&L chart, the loss and the gain is limited. There's a cap in both profit and loss. Gain. So as we see from the chart, both profit and loss are capped. So if the price goes way up, the loss is limited. When the price goes way down, the gain is also limited. This strategy is used when we have a very clear idea of the market, like if we are very bullish or very bearish in the markets. And as this is a short call spread in the charts, we also earn theta, earn from time if the market stays stable, and when time passes, we earn money from it. The third strategy to be introduced is Iron Condor. It's a spread strategy. It is betting for a volatile market but unsure about the direction. As we see from the chart, we earn money from this strategy no matter the price goes up or down. However, as we see, the profit and loss are both kept limited, so there won't be an infinite gain or infinite loss or liquidation happening from this strategy. So far, this strategy is a very high win rate one because, as we see, the loss zone is in the middle, but it is quite small. But the reward is also quite low because it's like a risk reward thing. Risk less and the reward is less, but this is quite safe. This is a very safe strategy. The fourth strategy is calendar spread. It's to short call or put with shorter tenor and buy back another call or put with a longer tenor. This strategy is mainly to earn from theta because the theta is different from the two legs in this strategy. Also, this counts on the relative value in vega and theta. However, there is a very serious tail risk, gamma risk, if the price goes very near the strike price, there might be risk that there will be risk of loss in P&L. However, in the previous strategy, if you take profit early, to be honest, there's not much to worry about. The last strategy to be introduced is risk reversal. It is composed by selling call and buying puts, or vice versa. You can also buy call and sell puts. This scenario, this is using the scenario when it's in coin margin. Like in coin margin, uh, you might want to hedge without cost or low cost. And after all these scenarios or strategies, I think many of you might be wondering how how can one trade options very efficiently? And here are some tools, trading tools that we recommend you to use, and it is some built-in applications in a SignalPlus dashboard. The first one is Smart Dealing, which is an order management tool that helps you place order and execute your strategy seamlessly. The next one is Risk Scenario, which is a tool that helps you to visualize all your risks and scenarios so that you can manage risk properly in case anything happens. The last one is Virtual Account. It's a tool that allows you to simulate different strategy or pricing. Some pain points when we are executing multi-leg strategies, like like the 4 to 5 strategies we have introduced earlier today. For example, if the sell leg is matched while the long leg is not matched yet, when the price moves by a lot, we might get liquidated even though we are right about the market because the long leg is not matched and the risk is not well hedged. Therefore, we need smart dealing. Smart dealing is a tool that automated and efficient execution of multi-leg strategies. There are a few components in this feature. The first one is dynamic limit order, which can allow users to place order always based on the mark or the mid price. The second feature is balanced order placement. It's to minimize splitting of multi-leg strategy, to make sure that, as for example, if you're placing an order in big size, you can split it into 50 portions to make sure to minimize the impact in the markets. The last feature is time restriction. You can maintain your balance in multi-leg order with a validity period. So, for example, you can make sure that it cancels 30 minutes later, your whole portfolio. The next trading tool to be introduced is risk scenario. It is actually a risk stress testing tool. So you can figure out in what scenario liquidation will happen. For example, when IV changes, when time passes, when BTC price changes, what will happen to your P&L and your portfolio? This looks like an Excel sheet, but it is very helpful for you to simulate all the scenarios and the corresponding profit and loss. As price is unpredictable, but scenarios are, we can easily lay out all the scenarios that when price goes up, price stays stable, when price goes down, 1 day later, 2 days later, or implied volatility changes. These are possible to be laid out while price is unpredictable. With this, we can figure out what will happen to IV, to initial margin, maintenance margin, and P&L. The last tool to be introduced is virtual account. You can simulate real market situation with virtual accounts by placing order with the simulation. You can also investigate different strategies with fake money. Yeah, so these are the different tools, and it will be very helpful if you utilize all of them to execute the strategies mentioned earlier today. So this is the end of today's Options Lab course. So if there's any questions, feel free to ask now. Hey, I can read your chat. How to get a clear idea of markets? Um, to be honest, I don't think you need a clear idea of the markets because the market is unpredictable. More importantly, you need to know what's your view towards the market. Are you bullish? Are you bearish? Do you want to earn from time, or do you want to earn from volatility? So you need to first be very clear about what you are trying to do, and execute strategies accordingly. Yeah, also, if you are interested, you can also join our SignalPlus community or Coincall community for further information or discussion with different traders. Also, we are now introducing a 5+2 lucky draw. By trading 400 over 400K volume, you'll be granted a lottery ticket, a number, and by doing so for several days, you'll get a higher chance to win a limited prize pool. In the first strategy, I said if you are clearly bullish or bearish, if you are bullish or bearish, this is the but if you're not, it is not recommended to use those strategies. Yeah, I've sent you the link. You can join here via Telegram. Yeah, cool. You can actively talk to different traders about what your questions or what you have thoughts about the market. So you might learn more about market insights and develop your own view. Cool. Also, when you speak, you can also I can also join your discussion and make sure that you understand everything in this course as well. Okay, I think we're good now. This is the end of the third option labs. And thanks everyone for participating.